the past decade, the lifestyle of the average Indian has undergone drastic transformation. Once it was about surviving, focusing on the essentials like roti, kapda or makan. But today the conversation has shifted. From upgrading smartphones from basic models to the latest iPhones, to swapping humble cooking pots for high-end non-stick cookware, Indians are increasingly choosing to spend on things that reflect status, comfort and quality. It's not just about meeting basic needs anymore. It's about indulging in finer things that make life a bit more luxurious. Take a moment and think about your own life. Have you noticed how your shopping habits have evolved? A few years ago, online shopping might have been a rare treat, but now it's a go-to for everything, from clothes to gadgets to groceries. We have also seen a boom in the number of Indians willing to spend on experiences like dining at fancy restaurants or taking international vacations. It's clear, the average Indian consumer is not just consuming, but consuming differently. So what's fueling this shift? And what does this trend reveal about economic and social changes taking place in India today? How are companies driving this premiumization trend and what sectors are poised to benefit? Let's explore how this shift is reshaping both personal finances and broader market dynamics. Let's begin. You're watching Informed Investor, an initiative by Equentis. But first, let's understand the concept of premiumization. Premiumization is a consumer trend where people increasingly shift towards purchasing higher quality, more expensive products and services. It's about opting for a better, more luxurious version rather than settling for the basic option. This shift often signals changing aspirations, improved disposable incomes, and evolving lifestyles. This trend is evident across a variety of industries. Take the automobile sector for example. The growing demand for SUVs in India reflects a shift from small, budget-friendly cars to larger, more sophisticated vehicles packed with features like sunroofs, advanced infotainment systems, and top-notch safety tech. Customers today are willing to pay extra for comfort, style, and better performance. Another everyday example is personal care products. Premium shampoos with exotic ingredients and advanced formulations are replacing mass market options. People aren't just buying shampoos to clean their hair anymore. They want nourishment, scalp care, and even salon-like treatments from the bottle. We see this trend in food and beverages too. Consumers are upgrading from regular instant coffee to artisanal blends, flavored cold brews, and craft teas. Even basic commodities like salt and chocolate are seeing premium versions gaining traction. Think Himalayan pink salt and gourmet dark chocolates. Alright, let's break this down and understand what's really driving the shift towards premium products in India. One of the biggest factors here is rise in disposable income. According to Goldman Sachs report, affluent Indians have grown at a 12% CAGR between 2019 and 2023, much higher than 1% CAGR of India's population. And the number of affluent Indians will be 100 million by 2027. As people earn more, they naturally want to upgrade their lifestyle. It's not just about owning the basics anymore, it's about owning better, higher quality products that enhance their day-to-day lives. And with that rising income comes a shift in aspirations. People are no longer content with just getting by. They want to experience the finer things in life, be it luxury gadgets, high-end fashion, or even premium groceries. Here's an interesting point. Premiumization isn't just for those who have a lump sum ready to spend. With easy financing options and EMI plans, people can afford premium products without burning a hole in their pockets upfront. From buying smartphones and cars to high-end home appliances, everything is now within the reach thanks to the availability of credit. So a significant factor driving Indians to indulge in luxury shopping is the increasing use of credit cards for spending. According to recent data from Reserve Bank of India, credit card spending in India experienced a remarkable 27% year-on-year surge in FY24, reaching 8.26 lakh crore rupees. On a 10-year CAGR basis, it has risen to 28.4%. And did you know that Indians have more credit card owners than income tax filers? Social media has completely changed the game. Platforms like Instagram, YouTube, and Pinterest have become windows into aspirational lifestyles. When people see influencers or even their own friends showcasing premium products, it naturally creates a desire to upgrade. And let's be real, we all want to share moments of pride. Whether it's that new car or a designer handbag, social media thrives on those moments. There's a structural change in the retail landscape itself. Organized retail, whether it's premium malls or online marketplaces like Amazon and Myntra, offers a curated shopping experience that the unorganized sectors just can't match. These organized players bring credibility, better customer service, and access to international brands. That shift makes it easier for consumers to explore and invest in premium products. Consumers are increasingly prioritizing health and wellness, leading to a preference from premium, high-quality products in food, personal care, and fitness categories. Organic, natural, and eco-friendly products command higher price points and greater demand. Lastly, in previous budgets, the government focused heavily on capital expenditure as a means to drive growth. This strategy aimed at building infrastructure, long-term assets like roads, bridges, and public facilities, which did not yield the expected results. Even private companies were not investing as such. This realization has led to a change towards stimulating private consumption instead. By foregoing 1 lakh crore rupees in potential tax revenues through reduced personal income tax rates, the government hopes to ignite consumer spending and boost economic activity. So when you combine all these factors, rising incomes, easy financing, social media influence, and organized retail growth, you get a perfect storm driving privatization in the market. And that's a trend that's only going to pick up pace as India continues to grow. Now let's look at how premiumization would benefit the companies. One of the most attractive aspects of premiumization for companies is margin expansion. Premium products command significantly higher margins than mass market alternatives, boosting profitability. Once consumers shift to a premium product and perceive its superior value, they are less sensitive to price increases, creating a loyal customer base. By investing in premium segments, companies differentiate themselves from low-cost competitors, creating a moat that is difficult to breach. Premiumization allows companies to operate at multiple price points, reducing dependency on price-sensitive consumer segments. Now let's return to the question of which sectors stand to gain from the premiumization trend. The Indian auto sector is undergoing a significant transformation. There's a clear shift from basic hatchbacks to SUVs and electric vehicles, equipped with premium features like advanced infotainment systems, ADAS, and luxury interiors. Take the automotive industry for example. 60% of car registrations in FY24 were SUVs, showcasing a growing preference for higher-end vehicles that offer status and comfort. Even the two-wheeler segment is experiencing a premiumization wave, driven by demand for power bikes. Tech-driven EVs with their advanced features and environmental appeal have become especially attractive to urban buyers. You might be wondering which companies are driving this premiumization trend. First is Hero MotoCorp. The company has observed a steady rise in demand for premium two-wheelers. Motorcycles with 150cc and above engines have grown at a fastest pace, with the 200cc and above sub-segment recording a 14% CAGR over the past 3 years, the highest among all motorcycle categories. Next is Maruti Suzuki. The company is expanding its premium SUV portfolio to meet growing market demand. In the last few years, consumer preferences has sharply shifted towards SUVs, which now account for more than half of the market. Meanwhile, demand for hatchbacks and sedans have declined. In another example, Bajaj, with a portfolio ranging from 60,000 rupees to 1.71 lakh rupees, has partnered with British bike maker Triumph to launch premium bikes priced upwards of 2 lakh rupees. Hero MotoCorp collaborated with Harley-Davidson to boost their premium offerings. Their partnership with Harley-Davidson resulted in the launch of the Harley-Davidson X440 in FY23 to FY24. The X440 marked Hero MotoCorp's entry into the middleweight motorcycle segment of the Indian two-wheeler market. It's not just auto OEMs leading the premiumization trend. Auto ancillary companies are playing a crucial role too. One such company making waves is Pricol. Known for its innovation and quality, Pricol manufactures a wide range of components including automotive instruments, sensors, and telematic solutions. As Indian consumers increasingly seek vehicles with smart features and cutting-edge technology, Pricol has positioned itself as a key enabler of this transformation. So what's the profit mechanism here? Premium models yield better profit margins compared to entry-level vehicles. Connected car subscriptions and maintenance packages provide additional revenue streams. Long-term service revenue opportunities from electric vehicles. And what should investors look out for? If you are evaluating investment opportunities in this space, here are key factors to consider. Look for companies investing in R&D to create advanced features and solutions. Look for companies who collaborate with global brands that can open up new market segments. Companies that dominate the premium segment or are expanding into it have an edge. As EV adoption rises, companies that adapt quickly will likely benefit in the long run. Companies that reduce import dependency and focus on local sourcing can protect margins. Even in the FMCG sector, there is this noticeable shift where premium and even luxury products are really starting to thrive. It's pretty interesting because as per a report from Nielsen IQ, while the broader FMCG market is struggling to hit double-digit growth, premium brands are growing at nearly double the pace of their regular counterparts. What's even more eye-opening is this: the premium segment now makes up 27% of total FMCG sales. But here's the kicker, it contributes a massive 42% of sector's value growth. That's huge, right? It's clear that consumers aren't just looking for the cheapest options anymore. They're looking for products that add value and elevate their experience. So what's driving this? There's been a shift in mindset. Consumers are more brand conscious today and they want products that match their status and lifestyle. With smartphones and social media, we are all constantly exposed to global trends and luxury options. So people are okay with paying a bit more if it means they're getting something better in quality. It's no longer just about affordability, it's about what the product can do for you and how it makes you feel. For example, HUL has really doubled down on this premiumization trend. They have even acquired a skincare brand called Minimalist, which targets a market that's not as affected by the consumption slump. You'll see the difference in pricing too. A 30 ml bottle of Minimalist Vitamin C Serum costs 699 rupees, while a Glow and Lovely cream is priced at 199 rupees for 80 grams. So HUL is tapping into that younger, more willing to spend segment that's focused on quality. Other companies like Colgate, Palmolive and ITC are also jumping in on the bandwagon. Colgate's premium segment is growing faster than its mass market products. Another example here is ITC. Now, ITC has premiumized the personal care business with the contribution of premium products to sales doubling in the last 4 years to 38% and accounting for about 2/3 of all new products launched in the last 2 years. Nestle is also bullish on premium products, seeing the opportunity as a 7,500 crore rupees market, especially in areas like coffee, chocolates and pet care. So it's clear that premiumization isn't just a passing trend. It's a major driver of growth in FMCG space. We all know that big names like Flipkart and Amazon are giants in the e-commerce space. But what's interesting is how platforms like Nykaa have carved out a niche by specializing in beauty and fashion. These platforms aren't just about selling products. They are becoming powerful launch pads for brands to gain recognition across the country. Now, when it comes to emerging FMCG brands, there's a clear trend. They are moving towards targeting premium markets. And how are they doing this? By focusing on high quality ingredients, promoting health and beauty benefits, and going natural and organic. Plus, there's a big emphasis on environmentally friendly packaging and cool modern designs that really speak to younger consumers. Take Mamaearth for example. That brand is a poster child for this movement. They've built their identity around being environmentally and health conscious. They use natural ingredients that are safe and free from harmful chemicals. And here's the smart bit. While they are targeting the mass market, they have managed to maintain an accessible price point that still gives off a premium vibe. Now, if you're an investor, there are few things to keep in mind when evaluating FMCG companies that are pushing the premiumization trend. If a company is expanding its premium product offerings, it's definitely one to watch. This segment usually delivers higher margins and faster growth. Brands that have strong digital strategies and engage well with younger, more tech-savvy consumers often perform better in the premium space. This is where social media and influencer marketing really comes into play. E-commerce is a game changer here. Companies that have a robust online presence and use platforms like Nykaa or even Amazon and Flipkart to reach a wider audience, are in a good position to capture the premium market. Lastly, premium products often stand out because of innovation. Whether it's offering organic ingredients, sustainable packaging, or cutting-edge technology in the product itself, companies that invest in this are more likely to maintain a competitive edge. In short, the FMCG sector in India is shifting towards premiumization. For investors, it's all about identifying the companies that are riding this wave of premiumization with innovation, well-marketed products that can stand the test of time. This trend is likely to shape the FMCG sector for years to come. The alcohol and beverages sector is another area where premiumization is making waves. Consumers are increasingly gravitating towards craft beers, premium wines, and high-end spirits as they seek quality over quantity. The demand for artisanal and high-quality products is at an all-time high, driven by evolving consumer preferences that prioritize quality, unique flavors, and authenticity over sheer volume. This shift is evident in the rise of craft breweries and boutique wineries that emphasize craftsmanship, innovation, and exclusivity. As disposable incomes rise and consumer sophistication grows, companies that align with these premiumization trends start to benefit significantly. Now, let's look at the companies that are driving the premiumization trend under this sector. First is Sula Vineyards. India's largest wine company dominates over 50% of the domestic wine market. Recent trends from Q3 FY25 highlight a clear shift in consumer preference towards premium wines. If we see the third quarter FY25 trends, economy and popular wines witnessed a decline in value and volume, while the elite and premium segment continued its momentum and witnessed an increase in volume by 3%, thereby registering a value growth of 5.6%. Additionally, the segment reached an all-time high of 80.5%. Even if you look at United Spirits, a prominent alcohol company that distributes well-known brands such as Johnnie Walker, Black Dog, Black and White, Royal Challenge, McDowell's, Smirnoff, and Captain Morgan, the company has reported significant growth in its premium and luxury segment. If you see the image, the luxury plus premium segment has witnessed superior double-digit growth of 28% adjusted growth over the last 3 years. This showcases the strong premiumization ongoing in the beverage sector. Now, what should investors look out for? Companies that are successfully capitalizing on premiumization will see higher revenue contributions from their luxury and high-end product lines. Monitoring segment-wise revenue growth can provide insights into how well a company is leveraging this trend. A company's brand positioning plays a crucial role in commanding premium pricing. Companies with strong brand equity in the premium and luxury segment are better positioned to sustain this growth. Market share expansion in the premium category is a strong indicator of long-term success. The ability to continuously innovate with new flavors, limited editions, and unique blends sets leading premium brands apart. Companies that invest in R&D and product development to create differentiated offerings tend to capture greater market share. Companies that effectively tap into emerging trends such as sustainable production, organic ingredients, and experimental marketing tend to build strong customer loyalty and engagement. In conclusion, the alcohol and beverages sector is shifting towards premium products, with brands like Sula Vineyards and United Spirits leading the way. Investors should focus on companies driving revenue from premium segments, strong brand equity, and innovation for long-term growth. The shift of premiumization has even moved on to the hospitality and travel industry. These sectors are witnessing a remarkable transformation as consumers seek luxury hotel stays and boutique experiences. Gone are the days when travelers were satisfied with basic accommodations. Today, they are on the lookout for personalized, high-end experiences that resonate with their lifestyle and values. Following the pandemic, there has been a surge in what is termed revenge travel, where people are eager to spend on memorable experiences. People are prioritizing wellness, personalization, and exclusive amenities over budget accommodations. Business travel is making a strong comeback, with executives preferring premium services. Now, let's see the metrics. Occupancy rates for premium hotels in India are projected to reach decade-high levels, indicating a strong preference for premium and luxury over budget options. ICRA estimates premium hotel occupancy rates in India to improve to 72 to 74% in FY 2026 from 70 to 72% in FY 2025. Additionally, average room rates are expected to rise by 8%. This growth indicates a strong preference for premium experiences among travelers, reflecting a shift from budget accommodations to high-end options. Interestingly, the landscape of premium air travel is evolving. According to travel portals, overall demand for business class and premium economy seats on aircrafts has increased 50 to 60% over a year earlier. Now, who stands to benefit from this? Major players like Indian Hotels, Oberoi Hotels, Make My Trip, Is My Trip are leading the charge by offering premium travel packages that cater to discerning travelers. Aviation stock Interglobe Aviation also stands to benefit from this trend. In fact, by the end of 2025, the airline aims to have 40 planes equipped for business class operating across 12 domestic routes. These companies have recognized the importance of personalization and unique offerings, such as wellness programs and curated activities that enhance the guest experience. Now, what investors should look out for? Investors evaluating hospitality and travel companies embracing the premiumization trend should focus on key factors driving long-term growth and profitability. Metrics like hotel occupancy and average room rates should be noted to identify ongoing trends. Additionally, high-margin offerings like spas, wellness programs, and curated experiences can drive profitability. Premium travelers expect flawless service and trusted brands. Established players like Taj, Oberoi, and Leela dominate, while Make My Trip and Ease My Trips offer curated high-end packages. Invest in companies that cater to premium travelers and not just budget seekers. Consumers now prioritize experiences over material things, and business travel is rebounding. These shifts fuel long-term premium travel growth. However, we need to keep an eye on risks like interest rates, inflation, and global travel trends, which affect spending power. Now, in summary, the hospitality and travel sectors are shifting towards premium experiences with companies like Indian Hotels, Oberoi, and Make My Trip leading the way. Investors should focus on growth in revenue, brand strength, and macroeconomic trend for long-term success. In conclusion, here is what investors should watch out for with the premiumization trend. Look for companies that can maintain premium pricing even in economic downturns. This shows brand strength and customer loyalty. Compare companies in FMCG or auto segments that continue selling high-margin products despite inflationary pressures. Premium products should naturally have higher gross margins. Watch how effectively companies manage input costs without diluting the premium feel. If a company consistently reports higher EBITDA margins alongside premium product growth, it's a green flag. Innovation keeps a brand premium. Evaluate how much companies invest in R&D to stay ahead. For instance, in consumer durables, brands that regularly launch cutting-edge appliances often command pricing power. Building premium perception requires strong brand storytelling. Check ad spending efficiency ratios. Companies that smartly balance marketing costs and ROI without excessive burn are better positioned for long-term growth. Premiumization often demands selective retail placements and D2C models. Look for companies that optimize online and offline channels to create exclusive feel. Premiumization thrives where discretionary incomes are rising. Watch how companies expand premium categories into Tier 2 and Tier 3 cities in India. Consumer preferences in these markets are evolving rapidly. Companies that successfully scale premium brands globally, like Titan in watches, unlock significant growth levers. Keep an eye on how competitors react. Price wars in premium categories erode value. Having said that, this is Neha signing off.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.